in the media conference with Lal Goel, which is brought to you by V4 News, Global TV, V4 Stream, मलनाडु टीवी इंडिया, न्यूज गांव से, संवाद सरोकार न्यूज, भारत पोस्ट न्यूज, ऑर्गन डोनेशन इंडिया फाउंडेशन, ज्ञान and Indo-Gulf Management Association. Our endeavor is to enlighten you with the current topic. And our today's topic is what makes startups successful. But before I will go on my main topic, I would like to inform you that today is the World Day Against Child Labor. The World Day Against Child Labor is held every year on June 12th, is intended to foster the worldwide movement against child labor. The World Day Against Child Labor is an international labor organization, ILO's sanctioned holiday, first launched in 2002, aiming to raise awareness and activism to prevent child labor. It was spurred by rectifications of ILO Convention on the minimum age for employment and ILO Convention on the worst form of child labor. Media conference with Lal Goel hopes that more and more awareness will be created so that no child will suffer. And now coming on our main topic, that is what makes startups successful. A startup is a company or project undertaken by an entrepreneur to seek, develop, and validate a scalable economic model. While entrepreneurship refers to all new businesses, including self-employment and businesses that never intend to become registered, startups refers to new businesses that intend to grow large beyond the solo founder. At the beginning, startups face high uncertainty and have high rates of failure, but a minority of them do go on to be successful and influential. Some startups become unicorns, that is, privately held startup companies valued at over $1 billion US. Startups typically begin by a founder or co-founders who have a way to solve a problem. The founder of a startup will begin market validation by problem interview, solution interview, and building a minimum viable product, MVP, that is a prototype to develop and validate their business models. The startup process can take a long period of time, by some estimates 3 years or longer, and hence sustaining efforts is required. Over the long term, sustaining effort is especially challenging because of the high failure rates and uncertain outcomes. Entrepreneurs often become overconfident about their startups and their influence on an outcome. Entrepreneurs tend to believe that they have more degree of control over events, discounting the role of luck. Many entrepreneurs seek feedback from mentors in creating their startups. Mentors guide founders and impart entrepreneurship skills and may increase the self-efficacy of nascent entrepreneurs. Mentoring offers direction for entrepreneurs to enhance their knowledge of how to sustain their assets relating to their status and identity and strengthen their real-time skills. Startups investing is the action of making an investment in an early stage company. Beyond founders' own contribution, some startups raise additional investment at some or several stages of their growth. Not all startups trying to raise investments are successful in their fundraising. In the United States, the solicitation of funds became easier for startups as the result of Jobs Act. Prior to the advent of equity crowdfunding, a form of online investing that has been legalized in several nations, startups did not advertise themselves to the general public as investment opportunities until and unless they first obtained approval from the regulators for an initial public offering, IPO, that typically involved a listing of the startup's securities on a stock exchange. Today, there are many alternative forms of IPO commonly employed by the startups and startup promoters that do not include an exchange listing. so they may avoid certain regulatory compliance obligations, including mandatory periodic disclosures of financial information and factual discussion of business conditions by management that investors and potential investors routinely receive from registered public companies. Investors are generally most attracted to those new companies distinguished by their strong co-founding team, a balanced risk or reward profile, and scalability. Attractive startups generally have lower bootstrapping, that is self-funding of startups by the founders, costs higher risk and higher potential return on investment. Successful startups are typically more scalable than an established business in the sense that the startups has the potential to grow rapidly with a limited investment of capital, labor, or land. Timing has often been the single most important factor for biggest startup successes, while at the same time it's identified to be one of the hardest things to master by many serial entrepreneurs and investors. Startups have several options for funding. Revenue-based financing lenders can help startup companies by providing non-dilutive growth capital in exchange for a percentage of monthly revenue. Venture capital firms and angel investors may help startup companies begin operations exchanging seed money for an equity stake in the firm. Venture capitalists and angel investors provide financing to a range of startups with the expectation that a very small number of the startups will become viable and make money. In practice, though, many startups are initially funded by the founders themselves using bootstrapping, in which loans or monetary gifts from friends and family are combined with savings and credit card debt to finance the venture. Factoring is another option, though it is not unique to startups. Other funding opportunities include various forms of crowdfunding, for example, equity crowdfunding, in which the startup seeks funding from a large number of individuals, typically by pitching their idea on the internet. Startups can receive funding via more involved stakeholders, such as startup studios. Startup studios provide funding to support the business through a successful launch, but they also provide extensive operational support, such as HR, finance and accounting, marketing and product development, to increase the probability of success and propel growth. Often 100% of a small startup company's value is based on its intellectual property. As such, it is important for technology-oriented startup companies to develop a sound strategy for protecting their intellectual capital as early as possible. Startup companies, particularly those associated with new technologies, sometimes produce huge returns to their creators and investors. A recent example of such is Google, whose creators become billionaires through their stock ownership and options. When investing in a startup, there are different types of stages in which the investor can participate. The first round is called seed round. The seed round generally is when the startup is still in a very early phase of execution, when their product is still in the prototype phase. At this level, angel investor will be the ones participating. The next round is called Series A. At this point, the company already has traction and may be making revenue. In Series A rounds, venture capital firms will be participating alongside angels or super angel investors. The next rounds are Series B, C, and D. These three rounds are the ones leading towards the IPO. Although there has been an increase in angel and venture capital funding, the amount invested must be augmented. It's crucial that the ecosystem is well integrated to connect startups to fund houses and other stakeholders. While most people would want to start their own company, not everyone can be entrepreneurs. It takes sheer dedication, commitment, and perseverance to build a startup from the ground up. One essential aspect that keeps startup founders cope against these challenges is that they are visionaries. It is their vision that allows them to pursue their passion. It's driving force that challenges them to explore a roadmap on how they will arrive at their destination. And to discuss this very, very important, relevant topic of today, that is what makes a startup successful, we have a very elite, knowledgeable, those who are authority in this field, panelist with us. And I would like to introduce my first panelist. He is Professor Dr. Mohanlal Agrawal. Professor Dr. Mohanlal Agrawal is the former professor of marketing, innovation and management, IIM Lucknow, XLRI Jamshedpur, and California State University, USA. He is president of Indo-Gulf Management Association. He is US Fulbright Fellow Boston, EFMD Fellow Paris, and British Council Fellow London. In 2019, he was ranked among the 251 most fabulous global education leaders. Welcome, Professor Dr. Mohanlal Agrawal on our show. Professor Dr. Mohanlal Agrawal, you are in the marketing field, you are doing the innovation and management, and you are very, very successful in this field. Now, these startups, which were not there in the early time when you have started your career, but now the startups are there everywhere, and they are creating waves in the field of new marketing, innovative marketing. So we would like to know from you your views on what makes startups successful. Professor Dr. Mohanlal Agrawal, please.
Many thanks, sir, for such a wonderful, comprehensive, introduction of a topic which is very, very new to most people, especially in the population that we all live in and the masses that we all serve. Really treat to hear you, treat to listen to each and every wonderful aspect of this startup from you, so that viewers as well as all of us are fully in control and context of the theme that we are discussing, which is the critical factors in startups. Let me begin first with one very major difference between a startup and entrepreneurship that will help us perhaps learn later what makes startups more successful or successful at all. All startups are entrepreneurships, but all entrepreneurships are not startups. Let's get this particular point very clear, that in both the cases, there is a risk bearing. And that is why all startups are entrepreneurs, but all entrepreneurs are not startups. So then the question will be, what makes them different from the entrepreneurship, the generic risk-bearing business model that we all know about? The first major difference is what we had learned early in our studies when I was, let us say, 20 or 25 years younger. We had said that an entrepreneur enjoys the small size. Entrepreneurs enjoy the entrepreneurial mindset. Entrepreneur enjoys the limited scope that he has, and any size that becomes bigger of him or her, that makes them a little bit uncomfortable. An excellent example of this kind of mentality that I'm telling you is of a very big brand which failed to live up to its expectations, even though it started very well. And the name of that particular organization was Shehnaz Hussain. Shehnaz Hussain was the first beauty brand in India which was entrepreneurship and started by an Indian lady who became a rage at her time. But the moment size became big, she became more and more cranky, more and more unsuccessful, and eventually she was overshadowed by many people very, very quickly. So this is the difference that I was trying to bring about, that entrepreneurship love a small scale, while startups are made, built, and always built on this particular premise that they must become unicorn, or the definition that you gave, that is $1 billion company things. For them, size matters. For them, scale matters. For them, success matters. For them, others matter. While in the case of the entrepreneurship, self matters. Self-ego is very, very important. And from that point of view, they refuse to go beyond what they are. Another failed example of this particular difference, again, I'm giving you in India, because except Mark, all of us are from India and we understand the psychology and the context of India. One of the biggest brands in India, which was a startup brand in, I would say, Banaras, the holy city of India, the Varanasi, was a fan called Sinni fan. And I'm sure that Mr. Goel, you will remember that. Now, that particular fan was started before the independence of India, and they went into a very, very bad time after some time. Again, because of this difference, not knowing that they are entrepreneurs and they couldn't rise to the scale of startup. I was one of their advisors, marketing advisors, or 20 years ago, when I advised them how to go further. And one of the things which really startled me was that the refusal to embrace growth, the refusal to embrace size, the refusal to understand that size matters. But they said, no, no, no. The moment size becomes big, I will lose the status of a small scale entrepreneur, and I will lose the benefits, privileges, benefits of tax, this and that government was giving to us because we were a small scale. And whenever they became big, they started another new company like the Ravi fan. This was, and I explained to them number of times, but I failed every time. So that is why I thought that this is a very good point at this moment to make, that what is the difference between the two. The second very, very important point which should be kept in mind is that in startup, you begin with the idea. Entrepreneurship also begins with the idea. So therefore, what is the difference? The difference is that in the case of entrepreneurship, the idea is to make that particular thing successful with the traditional management thinking. Startups have an idea, but with a very, very innovative and I would say disruptive thinking that we call disruptive model. They disrupt everything, while entrepreneurs maintain that particular thing. They comply with that particular thing. So that is the another reason that most entrepreneurs in India failed to become the kind of things that we are seeing today, like Baiju or Swiggy or any other example that you can give as names, the iconic names of startups. Third point, in the case of entrepreneurship, timing is important. But in the case of startup, timing is crucial, extremely crucial. So while you begin with the idea, but your timing must be right in the case of startup. If timing for any reason you have got it awry, chances are that your business will also have a difficulty very, very soon. So you have to ride the wave, you have to create the wave, and you have to keep the wave going. That is what is required in the case of the startup. The third, or probably the next major difference is that in the case of entrepreneurship, passion matters. Passionate about it. One of the worst things that you can do in a startup is to ride on passion. Of course, it's a wonderful thing, but passion doesn't make you, unicorn. Passion only makes you probably an entrepreneur, and probably few more people will have respect for you, but you will not have money for it. Money will come only from the third thing, which is in the middle, that is idea, timing, and in the middle, business model. Your business model must be such which is repeatable, which is scalable, and which actually should scare others rather than you. The point that I was making about Shahnaz Hussain. So previously, let's say 25 years ago, in our business schools, we were taught that large companies should think like an entrepreneur in order to be innovative. Today, I think that particular phrase will be most out of place. Today, what we have to say is that startups must think like established companies as they move along. Scale, bigness, the world is your village, that kind of thing. Rather than the village is my little neighborhood. No, that kind of thing will never work. Finally, the most important thing which I would like to say here is that the context in which startups begin, usually that context also has a critical success factor. And that is in what business you are in what industry you are in. For instance, 8 out of 10 startups are in service industry. They are not in manufacturing. They are in manufacturing without doubt, but number is very, very little. If you pick up any, whether it is Flipkart or Swiggy or US ones, Airbnb or any of those things, they were on shared assets model. They were on shared economy model. They were not on my economy model. So they were service technical or tech entrepreneurs also, tech startups also. It has a natural, I would say, fit between the startup and so service and startups are very, very, I would say, first cousins to each other. And that's why they are successful more when they are in this. Pick up any example of any product or goods related startup and they are struggling. Example, even Tesla. Tesla is also a very good example of that, where service wasn't involved, the manufacturing was involved. So this is a point which I want to say here to our August gathering, that startups with service have a greater likelihood of success than startups with manufacturing. Final point, and that final point is that most startups wonderfully know, and that's why they are so successful. They know how to convert a need into a demand. Remember, fulfilling the need of the customers is a wonderful idea, but it doesn't make you successful. It makes you successful when you transit the need into demand. And demand means that where customers are willing to pay the money they have and willing to borrow the money they don't have in order to have your product. Very simple. That need plus money to spend, need plus money with a willingness to spend is demand. And if we cannot create that need into demand, chances are that you will be a wonderful speaker in seminars and conferences as a startup person, but you will never be a billionaire yourself because you have failed to create the need into demand. So with this thing, I once again thank you, Goel Saab, for giving me this privilege to go this thing. I am extremely grateful because today is the most important day for our Indo-Gulf Management Association, which has the privilege of associating with you, the first session that we have today, and that's why it's a red letter day as far as Indo-Gulf Management Association is concerned. That media conference with Lal Goel Sahab and the Indo-Gulf are working on this particular thing, and our goal is to create this kind of thing as often as we can. Once again, thank you very much, Goel sir.
Thank you very much, Professor Dr. Mohanlal Agarwal, for giving your views, and thank you for the compliments, and thank you, and you are most welcome to join hands with media conference with Lal Goel. Now, I would just like to highlight few points which Professor Dr. Mohanlal Agarwal, he mentioned about the difference between entrepreneurs and the startup promoters. And he mentioned how the Shehnaz Hussain, which was a very big brand initially, but failed, and also the Sinni fan. I can also share one example of Sumit Mixi. I met the promoter and I told them that the only way out to come out from all the financial problems and to become, because the brand was so big, they could not handle and they were dead written. I said, you please come out with a IPO, but before that, you must have the input of venture capital. And that is only possible that if you have a startup which will sign an agreement with the existing company and that type of model. They agreed, but afterward, you know that once it's a family organization, it's not easy to convince everybody. Now, one more thing which Dr. Mohanlal Agarwal has mentioned about the idea. The startups are based on ideas. It's not on the real, because mainly he has also mentioned that all the startups are generally of service industry. They are not in the manufacturing industry. And he has given the examples of Airbnb and Zomato and Swiggy and whatnot. Similarly, he says the timing is very important. If you will just imagine, just think that, no, we will do it afterwards, it's not possible. Because you can be successful overnight if your timings are right and if you are striking at the right time. And he says, because this particular startups are mainly the technology wise, and he has mentioned about that need to be transformed in the demand. And he has given an example that if you can create that need so much that it will convert into demand, then definitely the startups are going to be successful. Thank you very much, Professor Dr. Mohanlal Agarwal. In the next round, I will ask the question about what you have mentioned, because they're very, very important points which you have made. Thank you very much once again. I would like to invite my next guest. My next guest is joining from USA, and I'm sure it's quite late there. But anyway, please, we welcome Mr. Mark Grimes is a serial startup founder and angel investor based at Oregon, USA. Mr. Mark is a startup founder, entrepreneur, and angel investor who has started each of his businesses over the last 31 years with cash on hand, no business plan, and all have been profitable within 90 days or less. He is past founder of Ice Cream Interactive, an advertising agency with clients such as P&G, Nextel, Disney, and Outpost.com. The agency was one of the top 20 interactive advertising agencies, according to Adweek magazine, and annual billing over $7.1 million and 40 full-time staff. Mr. Mark helps other entrepreneurs, small business owners, and startup founders develop their business models, and his current focus includes NetSpace, which provides co-working for startups, innovative tech companies, and freelancers. Maker Ferry Africa, a celebration of African ingenuity, innovation, invention, and social entrepreneurship. He started a startup radio network, live streaming podcasts for startup founders and entrepreneurs. Welcome, Mr. Mark Grimes. Mr. Mark, you have heard what Professor Dr. Mohanlal Agarwal has mentioned. You being a serial startup founder, an angel investor, and you are based in USA, from where this startup business started. Definitely, you are the real person to tell us. In here, we say that from the horse's mouth. So definitely, we would like to know from you your views on what success makes startups successful. Sorry, Mr. Marks, please.
Well, first of all, thank you, Lal Goel, for inviting me here, and Dr. Agarwal as well. Appreciate being here and appreciate very much the invitation. And I have to say, I think Dr. Agarwal, he took half of my notes. I have to re-edit what I was going to talk about, because he got so much of it so dialed in, very much on target. So what I want to do is kind of reflect on some of the things that I've seen in 31 years, or 32 years now, I guess, too, in building startups and helping startup founders build their companies. So, one of the things that was mentioned earlier before was ideas. Obviously, ideas is one of the critical things, but beyond those ideas, as you're starting to build a company, flexibility, simplicity, and ambiguity. Because when you're a startup founder, what you think you're building and doing today, in a month from now, it might well change. And you need to be open to that, and you need to be working with, whether it's your customers, your staff, or even your investors, you need to be open to those changes because they're gonna happen. So you can't be so solid and dialed into your idea that that's the only way you see it going forward, because I've never seen a business plan that's the same 6 months later. It constantly changes, and you need to be open to that. One of the main challenges is the success in a startup is generating new business. And I want to tell you kind of briefly a story of Maker for Africa and how that came to be. So Maker for Africa, which you mentioned, was a celebration of African ingenuity, startups, business, entrepreneurship. But that just started on Twitter. It started with a tweet. It started with, I was asking a gentleman named Eric Hirschman, I wonder what would happen if Y Combinator happened in Africa. Now, Y Combinator is a pretty famous accelerator down in the Bay Area. And I did not know Eric. He did not know me. He said, wow, rather than putting $25,000 into companies in Africa and most of the countries in Africa, it would be a $5,000 or $1,000 investment. So he and I started talking back and forth from that. From that became a weekly call that we put together with entrepreneurs and technology folks from around the world to talk about what was happening. And then from that, we decided to put on the Maker for Africa event in Accra in Ghana for the first year. We didn't know what we were doing. The five of us that founded it together hadn't even met each other face to face. This was all connected from being just online and then phone calls to make this event happen. We ended up having 100 people present and a few thousand people attend. We raised $500,000 and kind of built it from there. But the whole point, reflecting back to what I'd said earlier, is we needed to generate business. We needed to raise money from other foundations to really make this thing happen. And it was, in its own right, it was, relatively successful. Also mentioned earlier too, was talking about the business model of how it is you're selling whatever the thing is you're trying to sell, whether it's that service, whether it's manufacturing, whether it's a product. But what is the business model? Is it a subscription? Is it a one-off? Is it something that you're going to sell direct to consumer? Is it in a retail store? Is it a business-to-business environment? But in addition to the business model, you need to try to figure out, if you're building a startup, what is it that makes that product, that service unique? What is it that somebody else that might be close to it in what they're trying to build, but what sets you and your product and service apart? Because that's why customers are going to very likely fall in love with what you're doing. You have to, because it's a startup, you have to be very focused on speed, on execution. And ultimately, one of the best ways to do that, and I'm more of, you'd mentioned earlier, kind of the lean startup model, where you're really funding it yourself and trying to grow it. It's a pretty wise idea to test small and then scale fast. So when you find out that it works, you then put more time, effort, and resources and finance into it after that. According to a response of a small business trend survey, the best way to learn about entrepreneurship is to start a company. Not really a shock there, but it's so true, because you can spend months reading stuff online, listening to podcasts, but you have to go out there and start the company. So going back 12 years ago, when we started NetSpace, originally I wanted to start a co-working space in Africa. So I knew I had to do it first just to see how to make it happen. So I started one in Portland 12 years ago with a partner. Now at the time, I know it's kind of a challenge because everybody knows what co-working is now. 12 years later, everybody's heard of WeWork and all the other, co-working spaces around the world. 12 years ago, people weren't really that familiar with NetSpace. How did we start it? When people weren't familiar with the concept, familiar with the idea, All we did, we invited down about a dozen founders, a dozen entrepreneurs. We showed them the physical space we were looking at. Again, very simple to understand. You know, hey, we'll all be working together. You'll rent that office, you'll rent that desk. And after 6 of the 12 people said they joined, that's when we knew we had a business and a business model that was going to work. First and oldest co-working space in Portland. Obviously, things have exploded in the whole co-working area since then over the last 12 years. To be candid, March of last year, you know, when COVID hit, I kind of assumed by May that co-working and certainly our space was not going to make it through the end of last year. And at the beginning of 2020, we almost had NetSpace sold. Then March hit, COVID hit, and I didn't think it would make it through the end of the work at the end of the year. At the end of the day, March 2 months ago, we sold it. So I'm no longer involved in the company other than helping the new owners build and grow it from there, which I'm thrilled with. Other critical, what will make startups successful? Customer acquisition. So much of this goes to sales and marketing, and then also the potential of all the different levels you hit of, you know, seed investment, VC, angel investment, and all the different rounds after that. But customer acquisition and sales and marketing is the cheapest and the best way to fund your company, because when you can fund your company, your startup, through sales to customers, you're just fulfilling products. You don't have to give up any equity in your company. So that's the best way. And ultimately, even if you do raise money, you still have to eventually get customers and grow your sales. 60, as of 2 years ago, 67% of Series A funded startups were already generating revenue before they were funded. So a lot of people, I think, make the mistake that they're not going to start the company until they get funded. And that's very likely, very, very likely not going to happen. So, you know, start selling as soon as you can, and you're also going to get early feedback from customers, or whether they're buying or not buying. Even if they're not buying, they're going to tell you why, and you can know how to adjust your business model. What else? So another things that factor into successful startups is focus. You can't be all over the place. You have to know what it is that you're trying to build. When we were building NetSpace, we weren't trying to open up a coffee shop out front. And for those of you that had seen WeWork implode, you know, they were trying to getting into housing for entrepreneurs. They were trying to get into education. They were trying to get into early education and child sitting, babysitting for kids. And that just was something that it was too convoluted for their business model. In addition to focus, as the doctor mentioned earlier, you know, passion is great, but passion isn't everything. In addition to passion, you know, you need to have the motivation. You need to have absolutely the right founding team. Because if you have a team of founders of, say, 2 or 3 or 4 founders, it has to be the right team. And it's critical that your first half a dozen or more key hires all be the right people. Because it's one thing to manage a team of, you know, 15 or 20 people, and it's another when it's 100 or 200 or 5,000 people. When there's so few people, one wrong person can really collapse the company. You have to have the right team, the right everything there as you're searching for that product market fit. Ice Cream Interactive, there are 2 primary reasons why startups fail. I know this is about what makes them successful, but all you have to do is look at the opposite of what I'm going to say here too, right? So the 2 primary reasons they fail. The number 1, due to misreading market demand. Okay, that's 42% of the cases of startups that fail. 42, almost 50% fail because they're misreading the market demand. Well, think about what that's really saying. Had they been going out earlier and trying to make sales, they would have known, they would have been getting the scale and the traction that was mentioned earlier that's so critical, they would have known that, but instead they probably raised too much money, and then all of a sudden they're fighting to try to make sales to fix the problem, and money can't fix a misreading of a market. The number two reason that a lot of companies will fail, 29% of the time, running out of funding. Again, look at that. They're running out of money. What does that mean? That usually means that VCs have put money into them. Now they've run out of money and they don't have the customers there paying for the service or the product. So again, it's so much of this goes back to sales. Zappos, which is a shoe company based out of Vegas now, and Tony Hsieh, who passed away a little over a year ago, but one of his sayings was, chase the vision, not the money. The money will find you in the end. And there's a truth to that. One of the beautiful things that Tony did was he built such a strong, and so many successful startups do, he built such a strong company culture around Zappos and around the company and the culture of just both the employees and the customers. And one of his things was when somebody calls up Zappos to talk about ordering shoes, there's no time, they're not trying to push people to make that phone call and get off that phone call in 3 minutes. They'll talk as long as they want. One of the other amazing things, and I met Tony when he started his first company, actually close to 20 years ago, which he sold to Microsoft, called Internet Link Exchange. But one of the things that he's done in building that corporate culture, which I just can't hit hard enough here too, he had a thing when they were relocated and moved to Vegas, is when anybody came to Las Vegas, if you called up, and I actually sent him an email, and we had a chance to do this too. So head into Vegas, send him an email ahead of time. They sent out a car to pick you up in Vegas, even though you had not necessarily even purchased a shoe from them before. They picked you up at the airport in this nice air-conditioned car, gave you ice-cold water, took you to the Zappos headquarters, brought you into this amazing place. You signed in, and they sent you through their thing. Each aisle of all their desks was all set up like, one was set up like the jungle. Another was set up like science fiction. So every row, everything had a different thing. All their staff would stop and wave at the guests. And there was only like 2 or 4 or 6 guests at a time. What else did they do? Oh, at one point in time, somebody behind one of the reception desks challenged me to a hula hoop contest. I mean, funny, fun stuff. And then at the end of it, and the tour only lasts like 30 minutes, at the end of it, there's a really nice library in the front reception area of some of the newest business and startup books. And you're invited to please take a book with you as you go. And then they just happily take you to your hotel. It was ridiculous. It was so amazing. I mean, Tony was a brilliant, brilliant startup founder. And I could keep kind of going on and tell all kinds of stories, but you know what? Leaving it there with Tony seems like a good place to pass the torch.
Okay. Thank you very much, Mr. Mark, for giving your views. And I would just highlight few of the views. He says, to a successful startup, you should be having a quality of flexibility. And he means of the flexibility is that you should be open to hear from the customers, from the investor, the angel investor, because it's a market is changing very fast. So you should be flexible to change your marketing strategy. You should be very simple. Simplicity is required because you have to be open. You should give all the views whatsoever you are getting, and you should be open in all your dealings so that the investors or the customer will have more and more confidence in you. He also mentioned the startups' main aim is to acquisition of customers. That is the main aim. Initially, the profit will not be there, but if you have more and more customer base, then your startup will have a more customer base and you will be successful as far as the startups are concerned. He says the successful startups are those who have started earning the money before they go out for the funding. And he has given the data about 60% startups have started earning before taking the funds from outside. And he says everyone has to be focused on what they are doing, and they should have a right team, right selection of the team, because that is very important. One bad fish can spoil the everything. And he also mentioned about the failure, and he says the two reasons of the failure of the thing is the misreading the marketing demand. If you feel that no, it is going, and I can give you the example recently what happened during the COVID, because the demand of the hand sanitizer increased immediately, and the face mask, everyone, especially in India, started manufacturing beyond their capacity, exporting it to USA and other countries, as well as in the domestic demand. But as soon as the COVID, in the first phase, I'm talking, once the COVID came down, it's almost nil at that time, immediately the demand was zero. And they could not sustain. So those startups which started for this failed. So what Mr. Mark means that you have to see the demand not of today, but after 6 months of 1 year also. You should read it properly, then only come out with the product. He also mentioned the main reason, one of the main reason is the running out of money. Always the startups have the problem that they don't have money. And he has given his own experiences, how he became successful even in the South Africa, and he has given about the shoe company in USA. Thank you very much, Mr. Mark. I think you require a full one session so that viewers can be more educated. And today the condition in India is, which we will be discussing in the second round, is that we require proper guidelines and guidance. And it's a new concept, as Professor Dr. Lal Goel has mentioned. And I'm sure with his initiative to bring such type of international repute personalities on our show will definitely be beneficial for all our viewers also. Thank you very much, Mr. Mark, for giving such enlightening views. Thank you very much. Now I would like to invite my next guest, and she is Miss Unnati Bagga. Miss Unnati Bagga is a startup mentor and organic growth specialist based at NCR. Ms. Unnati is an organic growth specialist helping companies and founders to go viral with powerful marketing ideas and funnels. She has trained hundreds of students for personal branding, LinkedIn marketing, and social media marketing. With a six-figure, this woman tells us how planning, funnels, and technology can make a business scalable. She is working with some of the best startups in India and is here to share what she had learned all this while. Thank you, Ms. Unnati Bagga, for joining our show. Ms. Unnati Bagga, you have heard Professor Dr. Lal Goel as well as Mr. Mark and their views. Now we would like to know from you your views on what makes startups successful. Ms. Unnati Bagga, please.
Hi, thank you so much for having me here. It is an honor to be here with so many people, and they are so experienced. Thank you so much, everybody, for giving me those 12 minutes to speak summarize my learnings over the years and get it in front of you. So basically, I would divide the entire success for startups in 4 phases. You get the idea, you get the right people, you keep on innovating, and then you do the marketing like never before. We always look up to Amul's little girl trying to hop onto some trend. Whenever there's something happening around the world, that little girl is always published on social media and on newspapers to give us a message. That's the kind of marketing that is sustainable. I agree that we require a right time to launch a startup, but Paytm was launched in around 2010, and Paytm was not waiting for the demonetization to happen in India to be successful. And similarly, Zoom was not waiting for the pandemic to happen so that everybody can come online. I understand that it's important for a startup to seize a particular timing, but that does not mean you start that time only. One wrong thing with all the sanitizer companies was that they started immediately after the demand was there. No, you start very early, and then there's one opportunity that will blow the entire all the candles on the cake, and that is when you will get the right ROI. Byju's went from this to this just because online education started going, became a trend. People were not ready or reluctant to go to tuition centers because of COVID and everything. But that does not mean they started around COVID, right?
I think we lost Miss Unnati Bagga. There is a problem in the internet there. So we will take her when she will be back. I will like, are you there, Miss Bagga? No, I don't think you are there. No, yes, now you are there.
I think she's there, but her mic is not working.
Now she has come back.
Okay.
Miss Bagga, you are there now. Yeah. No, we can't hear you now. Can you?
Is it better?
We cannot hear you, Unnati.
Yeah, please speak loudly. I think her net is weak.
Yes.
Okay. So, Miss Bagga, why not you change your position or come on a mobile network? The problem is with the Wi-Fi. Many times it happens. It's raining here. I don't know, in Delhi, NCR, it's not raining. It's raining here. So please change your. Can you speak now?
Yeah, I can.
Yeah, please go ahead. Please go ahead.
Okay. So basically, startups don't wait for the right time. They are going all along, and there's one right time that just clicks and makes everything amazing for them. And then we think that it's an overnight success. But I always tell founders who come to me that it's 1,000 days of grinding and 1 day of shining in the daylight, which people call overnight success. So that's the thing. Have an idea, have people. People are building blocks. They can just make or break your entire equation. And then innovation. You've achieved this, but if you're not introducing new features, new technicalities, something new for your audience to come as repeat customers, probably the lifetime value of your audience or your customers is diminished. And you need somebody to pay you again and again. And that's why health startups, they always try and innovate in a way that they're teaching so that people on a monthly basis, because we need to take care of our health forever. So they keep on innovating so that people pay them again and again, become their repeat customers. One thing that I saw, so I was on a call yesterday with a digital marketing agency from US, and they asked me, why don't you record your courses? And why are your courses just one-on-one? So I told them that marketing is changing so fast, I'm not sure how often I need to update my recorded courses. And that's how versatile the market has become. But one thing that I can always tell, and I do tell to all my clients who are these amazing startups, very well funded, is that when the founder becomes the face of the company, it's a little easier to brand that company. We all know Kunal Shah, and then we know Cred. We know Asim Qureshi from Quora and LinkedIn, and then we know Jibble. We all know Manu Kumar Jha, and then we know Xiaomi. These have become superpower personal brands, and that's like, we talk about Tesla, right? But Tesla has till now, at least there's nothing on the internet that they have spent this chunk of money in acquiring users. It's just one man, Elon Musk, trying to do something over the internet, and then everybody knows about Tesla. That's how amazing. So if you don't have funds, it's okay. If you don't have the money, if you don't have the seed funding, perfectly fine. Just have a personal brand of the founder and you're sorted. So I think a lot of times people are just on the pedestal that I need bootstrapping and I need this and that. And I think when I've built that 6-figure business for myself, I did not have the fund. I was out of a job and I was battling through some medical condition, no savings, nothing. And then it just started with one person, one website, one LinkedIn profile, one Instagram profile that blew everything for me. So I think it's very important to give funding or money the second in line position. And the first position is build a very strong brand. Now it can be for your company or it can be around the founder. and you'll be able to success a little faster. Another thing is product market fit, which a lot of founders don't do it because they're so passionate about their business. They're like, okay, if I like it, everybody is going to like it. But that's not the case. So you should have at least 1,000 people interested in your product. You run ads, you go to Facebook groups, you go to LinkedIn groups, you conduct webinars, whatever it is. And once there's data backing you that people will pay you for this service. I was consulting this startup which is into Mexican salads, and they told me, do you think in Delhi people would like Mexican salads? And I was like, why don't we try it? We run a campaign and we asked people, how often would you order, and what would be the price point of each bowl? And we got really positive response. And that's when we realized, now there's a product market fit, which is backed by numbers. So why not just run it? So that's where the entire funnel comes into the picture. You have a person that you can make a brand, sorts your branding and marketing. You have a team that can do sales, and then you have a product market fit. You amalgamate all these things, and then you reinvest in your business for innovation and technology. Now, you don't need to have the perfect website from day one, or you don't need to have that perfect team from day one. You can start with an army of interns, but the idea is simplify sales, marketing, and how people are looking at your product. You can simply call it a yoga class, or you can call it, this can transform your life. Yoga is the most beautiful gift that India has given to the rest of the world. And when you put it like that, probably a very normal trainer from Rishikesh becomes a superstar because of the way that you've pitched that idea. So I think with the idea, you also should know how you should pitch that idea, because there are several yoga trainers, but then there's one that calls himself very authentic, starting from the roots of, or the yoga capital of India, that is Rishikesh. And the way that he puts the words forward probably attracts the ideal tribe. So that's very important. Also, another thing is, so I wanted to start a LinkedIn Academy, and I was like, okay, I'll do this because everybody is on LinkedIn. But today also, having a YouTube Academy is more profitable than having a LinkedIn Academy. Why? Because of the size of the market. So it's very important to niche down and know your target audience and know your ideal client. But that does not mean you'll just start with such a small market that after a point in time, the business is not scalable. Right. So in this book from which is called 0 to 1, they say heavily rely on technology and get into a market which has that market size, so that it's not just 5,000 people who can pay you, it's 50 lakh people who can pay you, so that even if you have competitors or anybody coming in the picture, you can hold on to that market size. Anybody who is opening an e-commerce business right now is not competing with XYZ. They're competing with Amazons or Flipkarts of the world. So that's why you need to have a very clutter-breaking idea, something which just makes your audience say, wow, this is what I'm looking at. This is what I wanted always. And then just translate it into sales in a very beautiful way, where copy, marketing, graphics, designing, and everything comes into the picture. So I think when a founder learns to understand that money is secondary, I need to create a very powerful brand. So a lot of times people come to me and say, whenever we see purple on Instagram, we just remember you. That's the kind of brand that I've prepared. Like every time all my posts, my aesthetics are in purple. And whenever I see orange, I feel that, okay, Xiaomi or Manu Kumar is there. So I think that kind of brand, when you create it, it's very difficult for it to fail. So the key recipe over here is, and I'll just sum it up in a minute, is have an amazing idea, have an amazing way to pitch it. Start with the bare minimum. You don't need a fancy website or a fancy team. Hire interns, whatever you can. Validate the idea, scale, and have repeat customers so that the lifetime value of your customer increases. And yeah, that's the recipe of a great startup. You can be in manufacturing or service, but just don't wait for that one ideal time that your startup will boom, because the overnight success also becomes overnight failures. So start a couple of years in advance, so that when your time is there, you have all the resources and the money to clinch onto that opportunity. So yeah, that's it.
Thank you very much, Ms. Unnati Bagga. And I'm sure our viewers are listening to you very passionately, and they are going to follow, and they would like to earn more and more money, as you have suggested. But she has made few points, important points, which I would like to highlight. Is she said, don't wait for the right time, and she has given example of Paytm as well as Zoom, that they have started earlier, but how they got the success, because like Zoom was not expecting that such type of thing will happen, and it has changed overnight. Similarly, she says about the innovation. You should have innovative ideas, not those conventional or traditional ideas. You have to, it's like a disruptive marketing. You should think something which no one else is thinking. That will be a success. Like, although she has not mentioned, but I can mention about the Airbnb. When they came, people were not expecting that they are going to be such a hit, but that has changed the entire hospitality industry. She has also mentioned about the promoter face. She says your face should be so prominent that it will become a brand. Although I differ in one way, that Mr. Malia was also having a face to see, and people have invested very heavily. And what is the condition today? So there are, but yes, she's right. Many successes are because, after all, the brand is to be made unless you have some ulterior motives. Then she mentioned about her own, how she reached to the 6 figures in earnings because of her ideas and the way she has done. And she says one must get the feedback. One must do the survey first. Check up what the market demands. If the market demands a particular thing, what the cost they can afford, and then you just come out with your product. And she says marketing is a very beautiful thing. It should be done very beautifully. How you can serve to the people, it depends on you, and that is called the proper or beautiful marketing. And one very important point she has mentioned, which I'm sure that one should understand, the money is secondary. You try to create your brand. If your brand is become powerful, the day will come when the money will come. I also believe that one day media conference with Lal Goel also fetch some money with the blessings of Professor Dr. Mohanlal Agrawal and Miss Unnati Bagga. Thank you very much, Miss Unnati Bagga, for giving such a nice recipe to earn money and to start a startup. Thank you very much. Now, I would like to invite my next guest, and he is Mr.
Just a quick comment that
Yeah.
we perhaps know how to make this startup successful, but we do not know how to make a billionaire more successful.
Okay. Thank you very much for your compliments. I don't know whether you are giving a compliment or I say anyway. And now my next guest is Mr. Aslam Junas. How you will pronounce? Otherwise, you will again correct me, Professor Agrawal. Okay.
It's Aslam Junais.
Oh, Mr. Aslam Junais. Mr. Aslam Junais is the founder and chief brand strategist at Level 8 Brands, a subsidiary of Element 8. For over 2 decades, Mr. Aslam has been specializing in strategy, branding, and design, working with some of the biggest brands globally. He is a strong believer in the power of simplicity, and combined with his love for solving complex problems, he likes to make things easier to understand, remember, and use. He likes to measure true success not by how much money you make, but by how deeply and positively you are able to touch someone's life. Welcome, Mr. Aslam Junais, on our show. Mr. Aslam, you have heard Professor Dr. Mohanlal Agrawal, you have heard Mr. Mark, you have heard Ms. Unnati Bagga. Now, we would like to know from you, your views, how to make, sorry, today the topic is such that I always become, what makes startups successful? Mr. Junais, please.
All right. Thank you, Mr. Goel. I hope all of you can hear me. And brilliant insights from Dr. Agrawal, Mark, and Unnati. Now, I think one of the problems with talking last on the show is that all your points are taken. Now, I don't know what to say today. So I just would like to start by, pointing to a small situation. We all go to the supermarket. Of course, things are a little bit different, but let's imagine you go to a supermarket, right? And then you have these shelves on both sides filled with products, and all these brands are screaming at you, buy me, buy me, buy me, right? This is the general scenario out there, right? And I think this is what a startup faces when they actually get up into the market. There's a lot of noise, there's a lot of confusion, there's a lot of people selling the similar kinds of products and services, and it becomes all the more difficult. And that's why I would just like to start by saying that how important it is for a brand to stand out from the competition. My background is basically in brand strategy and branding. I've been doing it for the past 2 decades. And I have a situation where every day people come through the door of my office, people who have actually invested a lot of their time, money, and effort putting out brands. And then 2 to 3 years down the line, they come and they complain that it's really not working for them. It really doesn't connect with their audience. And when you look at them, on the exterior, they have a beautiful logo, they have a website, they have a brochure, they have everything that they require, but it doesn't really connect with their audience. And then when we delve deep, we find that, you know, the core of the problem is that they haven't defined themselves clearly. And this is a major issue. You know, when you're a startup, you have so many challenges. You have a brilliant idea. You need to communicate that idea. And you have so many other challenges, like you need to put a team, you need to find the right kind of funding to get it off the ground. There are so many, getting the paperwork done. And once you sort all this out, the next thing that you really think about is, okay, we need a logo. Okay, let's do a logo. We need to get a website done. We need to get a social media out there, and let's get going. But the thing is that from a branding perspective, it's what I would want to add, or start by saying, is that it is critical for a brand to start by defining themselves clearly. Because if you really don't define yourself clearly, you're actually being part of the noise. You're actually adding to the noise. You're not standing out. And this is a big problem for startups. And this will lead you to spend a lot of your money, time, and effort in doing something. And then at the end of the day, it really doesn't work out. So actually, you know, when we work with startups, what we do is we start with the question of why. Why do you want to do, you know, what you do? Understanding this and defining this clearly. Because, you know, let's take an example of 2 jewelry brands. One brand A and brand B. Okay, so one brand is saying, okay, we've got the greatest products, we've got, you know, this fine jewelry with all these fine cut gems, and it's all amazing. We build it with the greatest products on the planet and so on, and we have the right kind of designers, and that's it, right? And you have brand B saying that, you know, we make you feel special. We want to, our mission, our goal is to make every woman feel special and confident. And to do that, to enable that, we get the brightest engineers and the most brilliant innovative artists and the most creative people to design our jewelry. And yes, we have this collection, we have this gem, we have this design. So there's a big difference. So which brand would you like to buy? Right? So brand A is talking something, brand B is talking something, and brand A is talking the same thing as brand C, D, and E, that we have this product, we have this collection, we have this, you know, this kind of products. But brand B is talking something from the inside out, right? We want to make you feel special and confident, and every woman wants to be that, right? So naturally, this is how you connect. And I think this is touching upon something that both Unnati and Mark has already mentioned as well. So this is how we start with the brand. So once we define the brand clearly, you know, define the values, because if you can get your audience to align to your values as a brand, you already have, you know, people, you know, aligned with your ideas and buying your products. This is what you want. So defining your purpose, clarifying your core values, and articulating your vision for the brand. This is where I want to be, is a good place to start for startups. And this is something that is missing. Once you do that, positioning is very important. How do you position yourself in the market? And when I say positioning, it's not just drawing a chart and plotting a couple of dots with your competition on there. It is actually occupying a space in the minds of your consumer. Al Rees, a brand positioning, he's known as father of positioning. He's written, positioning battleground for your mind. So what he says is that positioning is not what you do to a product. It is what you do to a mind of a prospect. So this is what you want to build, that perception, right? This is what you want to own the mind. We always remember the first person to go to the moon. We always remember the fastest person on earth, but we don't know who's the second fastest, right? The third fastest or the second person on the moon. We need to own that position. And this is what positioning is all about. And this would help startups to get noticed. And the final thing is to ensure that you express yourself correctly. This is where you talk about the logo, the colors, the fonts, the typography, the website, the brochure. So this is actually a small part of the brand, right? But this is what people don't realize when you're a startup. You don't realize all this at the beginning, and you focus on something not important without defining yourself clear, positioning yourself effectively, and articulating yourself powerfully. Because with this, you cannot communicate and you cannot connect with your audience. This is very important. Now, we worked with, I think Mark has some experience working with, one of his ventures was a co-working space. And I think we've actually worked with a co-working startup. And one of the problems, I'm basically located in Dubai, and one of the problems here is there are a lot of startups. And again, we were starting with working with this startup called Calip, which is again a co-working space. But then when we looked at them, it was not just about offering a space or a desk or a good coffee. It was actually about nurturing and growing the people, So we positioned them as an inspiring platform for aspiring entrepreneurs. So essentially what they did was not just give you a space, but they gave you the right tools, the right connections, the right training to get you off the ground. And this is this was what differentiated them in the market when you looked at other co-working spaces. So this is very important. So this is just a small example of what we did in terms of a startup. So again, going back, Simon Sinek, we all know Simon Sinek. He's a well-established author. He's a leadership expert. What he says is people don't buy what you do. So they buy why you do it, the reason. Why you do it. It is ever so more important to actually make sure that you communicate your purpose behind your brand. This is absolutely incredibly important, because if you don't do that, you spend a lot of your time, money, and effort doing something, and at the end of the day, you find that it's really not connecting with the audience. It's really not working out for you. So this is essentially looking at it from the inside out. That is number one. Number two is positioning yourself correctly. And number three is expressing based on, you've already established a baseline, you know what you're doing, you know how you want to be positioned. Expressing it correctly in terms of having a good logo, connecting on social media platforms, and having a great website that tells your story. I cannot stress how stories are important for a startup, because at the end of the day, we all emotionally connect with stories. We've talked about a lot of things. We talked about the funding. We've talked about the difference between certain things. We've talked about, but I think we also need to look at the emotional side of a brand, and a powerful story. I think Zappos, we talked about Zappos. It's a powerful story. And it's all about customer delighting your customers. And we have books, we have case studies, I talk to my clients every day about Zappos. And that's a story, right? So we need to build stories, and that actually connects with your audience. So these are the 3 points basically I wanted to touch upon to with regard to giving you an example of what makes startups successful. I hope I have been helpful.
Okay, thank you very much, Mr. Aslam.
Yeah.
And what Mr. Aslam has mentioned is the world is like a supermarket. Every product is asking you to buy, but why and how you are going to buy the one product, that is the main thing. And he says for that, the brand making is the main thing. He says ideas are there, but if you will not properly communicate that idea to the public at large, that you will not be successful. So his main emphasis is the brand and how to communicate that ideas. Although he has mentioned about the two jewelers, how they are communicating. One is the orthodox way, the another is how to make very special, and the people wants to go for the special one. Although our experience in India is not good for the jewelers, especially, although Professor Dr. Mohanlal Agrawal told me not to say anything wrong about in the show, but I have to mention because wrong is wrong. What Mr. Mehul Choksi and Nirav Modi has done, they had a very fabulous brand, and the brand was very popular, and all the ads were that you will be feeling so much special in going to their showrooms. And they not only looted India, they looted the entire world. Even in USA they have so many showrooms. So it all depends on your intention also. It's not only that you will sell by giving, like he has mentioned about the emotional stories. Yes, emotional stories are correct, but then you have to contain, you have to sustain those stories. You should not try to manipulate the things. But his feelings are very his experience says that you have to positioning the things properly. You have to be number one. Everybody remembers number one. Nobody wants to know who is number two. Thank you very much, Mr. Aslam, for giving your views. I'm sure the viewers are very much enlightened with such type of views given by all our panelists. Now, very quick question and very quick answers. First to Professor Dr. Mohanlal Agrawal. Professor Dr. Mohanlal Agrawal, everybody is talking about the success and failure of startups. You are talking about success, but you have mentioned 80% fails. Don't you think the failure, because Mr. Mark has said until we have to see the other side of the coin. I am seeing the other side of the coin. The reason of the failure is, one of the reason is the greed. The promoter of the startup wants more and more money. As Mr. Mark has said, that the shortage of fund might be not a shortage of fund, but buying big cars, buying huge properties for palatial houses for them and traveling abroad. They want more money, and then their focus from their startups waived. And that's why 80% of the startups fail. What do you say about this, Professor Dr. Mohanlal Agrawal?
The second point, which I would like to say is very important for you and for us, that point is integrity. Integrity is the most important aspect of a startup, because the startup means that people must believe you. And if your integrity is not visible, the startup will not be successful or it will fail. So number one point. Number 2 point is, sir, that in business, we teach mission and vision of a particular organization. I would like to say here is that for startups, vision is internally important and mission is externally important. Means what you are telling the society. So when you tell the society that my startup makes this particular problem go away or create that much kind of a difference in your life, perhaps that becomes easier. Mission. So mission is the same thing that beautifully, Aslam beautifully said, purpose. The purpose of your business must be very clear to them. So that will make the difference. As far as the third point which you mentioned, Nirav Modi and all those people, that is the problem of all businesses, not of that startup business only. The only problem which I would say these people have, that they think that staying in luxury also brings more money or more investment or more, kind of things. That is not so. Actually, research has shown that simple people are like Mark, that Mark unpretentious, from saying something which he's not. He's saying what he is and probably more, but he's not saying that. So if we can carry on with the principle of Mahatma Gandhi, trusteeship, that until the time you create a trust and the kind of benefit for everyone, you have no reason to enjoy yourself or enjoy yourself in luxury. This is the thing I would like to say. Thank
Thank
you
you
so
very much, Professor Dr. Mohanlal Agrawal. Now my question goes to Mr. Mark. Mr. Mark, we have seen, again, I am repeating, the 80% are failing as per the census here. Don't you think the startups are failing to give a proper exit plan to the angel investors or those who are invested in A or B or C series, and that's why this startups fails to deliver, and that's why the investor loses the interest in investing in that particular startup.
Yeah, I mean, one of the challenges, I mean, you know, there are certain hotbed areas in the United States that invest in startups. You know, it's the Bay Area, New York, Boston, and to a certain degree, you know, a little bit in Texas and Miami. Other cities, most other cities, the startup investor, angel investor, seed investor world is just, it's so nascent, it's so new that you have people investing in startups that quite frankly shouldn't be investing in startups. They don't understand how to run or how to add value to a startup as investors, like investors in the bigger cities do. So I think that that's one of the important distinctions is they may go and they may invest in 1, 2, 3, or a half a dozen companies. And as the truth is, as a seed investor, as an angel investor, you need to invest in dozens and dozens and dozens of companies to really get your money back. So you may see some timid investors that, again, invest in a small half a dozen companies. They're not going to see any exits, and that scares them out of trying to help these companies grow. I think the more seasoned investors are going to know how to kind of help at a much deeper level.
Okay, thank you very much, Mr. Mark, for giving your views. Now my question goes to Miss Unnati. Miss Unnati, you are saying about that one should be number one. Are you there? Yes, you are there. Please unmute yourself. What you say about Oyo and Ola? They are not number one. The number one were Airbnb and others. So how you say, and they are there, although Oyo was success before COVID. Now the condition is different. It's a totally gone case right now, as of now, because of the no occupancy and so many litigations. But even Ola, they all are, both are number two, not number one. What you say about that?
Okay. Thank you for the wonderful question. As per me, both these startups are in very bad or huge losses. But so Ola and Oyo, they did something that they became number one in one category. Airbnb right now in India is very expensive. So Oyo became the cheaper option, right? So they were like the first cheapest accommodation in India. So they became number one over there, but no point discussing because it all came down, the whole thing of sanitation, everything. It was pathetic. So though they tried to get into a space where they were cheap, but it did not sustain. The second is Ola. So Ola, when they started, they promised the drivers a better remuneration or a better cut from all the rides. And Uber, on the other hand, was more into user or customer experience. And here it was the drivers that were getting more attention and everything and the perks. But eventually Ola started following the Uber model and lost a lot of drivers who went from Ola to Uber. And right now the startup is doing pathetic. And so, so actually the number ones are still in the game, but the number twos are just diminishing.
Okay. Thank you very much. Thank you. Now my question goes to Mr. Aslam. Mr. Aslam, don't you think in the case like this COVID has come, all the startups could not sustain themselves? Few of them, yes, no doubt, like Zoom and all, but many of them could not sustain them. Those manufacturing companies who were conventional or traditional, they sustain themselves. Who were like the pharmaceutical industry, those companies. Don't you think the startups are for the time being, like you have created a brand, but unless you will not change and you will not come in the core sector, that is the infrastructure, you have the manufacturing unit, it will not sustain much. What you say about this? Time is short, only 1 minute, please.
All right. So thank you, Dr. Goel, for the question. Very valid question. And I think I would just like to start by saying that some of the, ever since COVID has started, we've seen, especially our agency has seen a in startups. People are actually rethinking their business. They're realigning themselves to the new situation. And this actually tells a lot about the market. Actually, people are thinking of going online. There's a huge surge in online e-commerce. I understand that you talked about manufacturing. Even manufacturing, traditional companies are rethinking, trying to realign themselves. And I think it all starts with defining themselves clearly. And this is, I mean, 6 years, 7 years down the line, even companies, they're coming back to us and saying, we need to refresh ourselves. We need to realign ourselves. We need to reposition ourselves. And we need to make sure that we are there. People connect with us, we get noticed. And I think this is very important. I hope okay. I'm making sense.
Yeah. Okay, thank you very much. So viewers, you have seen today that the experts in their field, they have given their views about the success of startups, and they are very, very clear in their mind. First thing is very clear, your integrity. If your integrity, and you are a visionary, if you have vision and your ideas, if you have a combination of this, then the success will be there. But if you will not have those things, then there is a problem. And definitely then follows the brand making and the marketing survey and whatnot. But first thing is your integrity, your intentions, and you have to deliver the things with a new ideas. And if you have a new idea, you can contact any one of them. They are brilliant in their field. I'm sure they can make you billionaire very soon. Thank you very much. And today's program, which has been live telecasted by V4 News, Global TV, V4 Stream, Malnadu TV India, News Gaon se, Samvad Sarokar News, Bharat Post News, as well as it was shown live on Facebook and YouTube. And our endeavor is to bring to you everyday new thing. But for last 4 weeks, we have started a half-an-hour program in the evening, which is called Kal Aaj Aur Kal Lal Goel Ke Sang. This is in Hindi from 4:30 to 5, where we are calling one personality who is an achiever in his own field. And there today our the chief guest is Professor Dr. P.P. Devan. He is a professor, head and neck surgery, AJ Medical College, Mangalore. He will be explaining about what is the good condition, how he became so big from the childhood, his life journey. So thank you very much, Professor Dr. Mohanlal Agrawal. Thank you very much, Mr. Mark. Thank you very much, Ms. Unnati Bagga. And thank you very much, Mr. Aslam, for joining us. And thank you all the viewers. And I hope that today's program is quite enlightening for all of you. Thank you very much.